Welcome back to the channel. It's me, Adam, and you are watching Unlimited Options Investing. In this video, we are going to take a look at an update of the cover calls that I sold yesterday on Tuesday, February 15th, today being February 16th. So what happened yesterday? I sold the Tesla 1000 call. I sold it for 1.3 or $113. And as of the close of yesterday, the option was valued at 0.68, so I was already profitable, at least unrealized. I didn't close it until today. I was even able to buy it at even lower than it closed at yesterday, at 0.33 for a total gain of 0.8 or about $80. This was a good trade. It was simple. It wasn't too much of a hiccup, no crazy surprises, but I can't necessarily say the same thing about my other two options that I had sold. There was a little bit of turbulence. There was a speed bump in the road, and I'll explain exactly what happened. So with Coinbase, I sold it yesterday at the 225 call for 1.3 or $135. And as of yesterday at the close, it was valued at 0.75 per contract. So I was up about 40% on my call with an unrealized gain of about $55. What happened today, I actually bought it up higher than it closed at yesterday at 1.15 for a total gain of about $15. And after commissions, I probably actually lost maybe a couple of dollars on this one. Why did I buy it higher? In hindsight, I can definitely say that I got spooked at this run-up. I don't think I bought it back at the very top, but around maybe $209, $210. It was most definitely an emotional decision, hindsight 2020. Of course, for all we know, it could have continued climbing and then it would have been a good decision, but I did definitely get freaked out at the fact that it rose so quickly. In fact, this probably wasn't even my biggest problem, which I'll show you with my next covered call of Airbnb. But that's Coinbase. Again, it was still profitable at about $15. Again, not including commissions here, but it was still profitable, not the end of the world. Even if I took a loss on it and it was a small loss, not the end of the world. The biggest thing is avoiding those big losses that wipe out all of your previous gains. So the covered call that I really want to take a look at is the Airbnb. This one specifically, I sold it yesterday, the 195 call with an IV of 105, because yesterday were the earnings. Earnings were good. They beat on the top and the bottom line. And after hours yesterday, the stock went up quite a bit. My problem with this one is that I sold it way too early on in the day when the price of Airbnb was at around $170 or so, 171, 172, somewhere in the low 170s. And by the close yesterday, Airbnb was at around 180. Same reason why the option I sold at 1.5 closed at 2.53, and I was underwater by about $103. Today, what happened with Airbnb? It opened up at 178, and the price of the option actually opened up at 0.01 because it was so far out of the money. What happened? The price immediately went right up to about 184, and from there even climbing up even higher to a peak of about 191, currently hovering around $188. Where I royally messed up with this one is I told myself I'm going to buy back tomorrow right as the IV crushes. I looked at my phone this morning. I was pretty tired. I stayed up pretty late. My own mistake. I saw the pre-market, it was still low, the market was down. I said, you know what, I'll buy it back later on in the day. I don't have to look at the market right at 9:30. Huge mistake. That screwed me over with the Coinbase option, and that also screwed me over with the Airbnb. Instead of buying it right back right at the open for $1 or $2 or whatever the price would have been, I bought to close at 1.25 and only made about $25, which in my opinion should have been a much more successful trade, but sometimes that just happens. It sucks, it hurts. But you just move on, you learn from it, and you don't make the same mistakes moving forward, and that's all you can really do. Acknowledge what happened, reflect on it, and then move on. Specifically with this call, I would have sold it closer toward the close right before the earnings call. I know that's easy to say because in hindsight, the price did go up, even though it necessarily didn't have to. Again, even though I was happy with the 1.5, this might be something I practice, especially when it comes to selling calls right before earnings. My second lesson, don't be lazy. When the opportunity is there to buy back your option, don't wait. Don't say I'll do it in a minute or 5 minutes. Do it right away. Close it. Take your profit so that whatever fluctuation happens later, you don't have to worry. Especially when the option is at $1. You can't really get any better than that. Especially with the option expiring at the end of the week, there's a lot of time for that to go against you, exactly what happened to me. And what better opportunity to learn from your mistake than trying at it again today with NVDA reporting their earnings after hours. Again, hindsight is 2020. I wish I had sold right at the open or even yesterday when I sold the Airbnb, but for all we know, NVIDIA could have opened up today at 265, 270. It just happened to go this way, and now we know it's at 257 or 258. It's so much easier to say, oh, I should have sold the option right over here or right over here. No one has any idea, so just sell an option at whatever price you're comfortable with, have your own strategy, and stick to it. Taking a look at, for example, the 300 strike price, so about $135 with an IV of 124%, which is very, very, very high. Usually NVDA is probably around 50 to 60% for IV, so seeing it this high makes it a lot easier to sell options. Similar to Airbnb yesterday, I just personally didn't execute that as well as I could have, hoping for a better result with NVIDIA. But again, with this stock, it always finds a way to finish in the money. But again, with earnings, it's a lot easier. So right now, the price being at about 257, let's say I were to sell the 300 strike price, so 300 divided by 257, gives me about 16% of room before my gains start getting cut off, with again $135 that I can receive in premium as long as NVIDIA stays below $300. If I want to be more aggressive and look at the 297, I can get $156, 295, 177, 292, 204, so on and so on. And when looking at the candlestick charts for NVIDIA, we have a major resistance at about $270 and another critical resistance around $295, $300, a very key psychological zone. So with the IV being that high and being able to sell such an out-of-the-money call for so much, a really nice situation to be. It's really a win-win. Either it doesn't reach 300 and you keep the entire premium, or it reaches 300, you get a 16% gain in your long position, and then after that you get cut off. So to which I ask myself and ask you guys watching this video, is it realistic for NVIDIA to go above $300? I mean, maybe anything is possible. We've seen the stock do crazy, crazy things in the past when I've sold previous covered calls, so it's definitely possible. Will it do it again in this current environment? I would lean more toward no, but again, really, anything is possible. So let me know in the comments below, what are your thoughts on covered calls, NVIDIA, Airbnb, earnings in general? Let me know in the comments below. As always, like, subscribe. I will see you in the next video tomorrow.